Hi, as a financier or a monitoring agency or a risk management team for loans given to a housing finance company, would you like to know a step-by-step guide to analyzing the AUM statement or the portfolio statement which is being prepared? If yes, then this video is for you. Hi, my name is Yash Shah and I am a part of the leadership team at SJA, a premier name in the field of monitoring of portfolio statements, AUM books of large NBFCs with corporate books and retail books under commercial vehicle segment, gold loans, housing finance, microfinance, and even factoring NBFCs. Recently, when we were engaged by a group of about 15 banks, financial institutions, and mutual funds to monitor the housing finance portfolio of a large NBFC with an AUM of more than 68,000 crores, we structured our legacy processes into a step-by-step guide, and this is how it reads. Step 1. Do a population study. Let's accept it. AUM books of retail NBFCs are lengthy statements. So it is very important to collate important traits of the book at one place to get a sense of what exactly we are dealing with. Some important characteristics to be summarized in Excel are number of lands, value of the average, maximum, minimum, and medium land, the percentage of secured to unsecured exposure, average tenability of the loan, the average margin and LTV, and the staging buckets of the entire population under stage 1, stage 2, stage 3 in lines with the IFRS. Step number 2. From the entire loan book, collate a sample of lands for review. One thing for you to understand for retail NBFCs is that you will always have a very huge volume of low ticket accounts. So value-based sampling would be of no use because even if you cover 1,000 or 2,000 samples, it will be a very negligible portion of the population. So in this case, you can either adopt a random sampling approach wherein you can use either a specialized audit software to shortlist randomly selected lands from the population for review, or if nothing else, you can allocate a unique serial number to each land and then use a rand between function in Excel to find the samples. Or if you would like a more scientific approach towards sampling so that your sample is as close as possible to the population, you can do a stratified sampling. For stratified sampling, you need to divide your population into various strata and then collate your samples from each strata so that your sample is representative of the population. The different types of strata which you can define here are the top borrower accounts, borrower constitution, locational distribution so that you cover the advances extended in various geographies by the NBFC, the credit worthiness so that your sample covers all buckets of CIBIL scores in which the lending has been done, the maturity buckets, the restructuring flags, staging, the value of collateral, and so on. By defining such strata and then doing sampling, you can ensure that your sample, the characteristics of the sample are closer to that of the population, which is ultimately the objective of sampling. Then step number 3, term sheet review. Once you have defined your samples, a review is to be done of the sanction terms as per the sanction letter or loan arrangement letter with the underlying master data of the sampled lands. The various data points which you need to review are the date of sanction, sanctioned amount, disbursed amount, rate of interest, security, LTV stipulation, security perfection, and the repayment period. This review will help to ensure that whatever terms have been sanctioned are actually the terms which have been put into the system and being complied with as part of the loan management system. The second part, and which is most important, is the KYC review of the borrowers and guarantors. Now, KYC review can either be a physical check of the documents which are available, or it can be an online authentication, or both. In today's age, where most of the government departments have put up the data online for authentication, you can use that data to ensure that whatever Aadhaar numbers or PAN numbers or SIN numbers or whatever other KYC data is there is in fact authenticated with the government website to ensure that it has fidelity and it exists. So that gives you a higher level of assurance. Step 4 in our review is a document review. In this section, a review needs to be done of the underlying critical documents with the associated values captured in the loan management system of the NBFC. Some documents which you can peruse are the internal appraisal note and sanction. It should be in alignment with the board approved lending policy and the delegated authority which has been extended to various hierarchies in the credit department of the NBFC. The second important document specifically with respect to housing finance is to review the copy of the LSR, which is the legal search report. Is basically a search into the title and mortgageability of the underlying collateral security. You can also review a legal audit report if it is available to ensure that whatever documents have been stipulated for perfection of security have in fact been held on record by the NBFC. The third document is the copy of valuation report, which needs to be obtained to ensure that whatever LTV or margin stipulation is there in that account is being complied with. Thereafter, you can review a copy of the internal visit report done by the credit department, and also these days many NBFCs have adopted geotagging approach for precise geotagging of their security, and those latitudes, longitudes are also authenticated by them at the time of the physical visit which is done of the security. Thereafter, you can review the SERSAI registration through the asset ID. In case it's a corporate borrower, you can review the ROC charge filing which has been done. All these steps will help to ensure that perfection of security has taken place prior to the disbursement of the advance. Step number 5, statement of account review. Now, once you've reviewed the entire term sheet, you've reviewed the KYC, you've reviewed the documents, it is time to review the statement of account, which is generated from the LMS of the NBFC. The important thing to review are the disbursement dates, disbursement amounts. Disbursement beneficiary is very important. It should ideally be the seller or a previous financier of repute, and in very limited and controlled cases, the borrower itself. Next, you have to see whatever repayment is there as per sanction is in fact being followed in the term sheet as well. Exercise special control in case there is a moratorium which has been sanctioned. Lastly, you have to verify, and this is very important, the source of repayment coming into that statement of account should originate from the borrower. It should be either a NACH mandate which has been given by the borrower, or a check or an NEFT which originates from the borrower. This is important specifically when you're trying to review a loan book for things like evergreening, the disbursement beneficiary, as well as the source from which the repayment is coming. Both of these need to be verified. Step number 6. Once you've done a review of all these items of your sampled lands, you have to review other critical aspects on a macro level like the ALM buckets, and if there are any mismatches. If mismatches are there, what are the plans and the steps which the ALM committee or the board has put in place to ensure that the mismatch is reduced in a time-bound manner? What are the macro level trends in critical ratios like net interest margin, portfolio size, portfolio composition, and compliance of statutory returns stipulated by the National Housing Board and RBI? There are various returns which have been stipulated, and we have to ensure that the NBFC is complying with them and the numbers being sent out are in parity with the underlying AUM statement which is under review. I hope the above video has been a useful guide for review of a housing finance company. Let us know in the comment section if you want us to make similar videos on other NBFCs, like those having a corporate loan book or those having commercial vehicle portfolios, gold loan portfolios, educational loan, microfinance books, or even a factoring fund in use book. Because all these NBFCs, there are certain very specialized procedures which need to be adopted to ensure that you can generate a reasonable level of assurance while commenting on those AUM statements. So this is me, Yash Shah, saying goodbye, and I'll see you in my next video. Thank you.